Hi everyone, in this video I'm going to be going over how financial regulators may soon start cracking down on surging house prices. The housing market is growing at its fastest rate in 17 years and house prices surged 2.1% in the month of February alone. But the financial regulators may soon be the party poopers and kill all these property spookers' gains and step in to cool this booming housing market. This would be welcome news for first home buyers or aspiring home buyers that even know how hard they've been saving every month, prices have just been climbing and the dream of owning their home has become more and more out of reach every month. What you have to understand is the housing market in Australia isn't a free market. It's 100% manipulated. For example, in March when house prices started falling and it looked like there could be a property market crash, the government and the financial regulators stepped in to ease lending standards and created huge amounts of incentives for first home buyers to buy property to stop a property market decline. These were things like the 5% first home buyer deposit scheme, the 25k home builder grant. In many markets, regional markets, you're getting 20k first home buyer grant to build. You don't have to pay any stamp duty and you don't have to pay any lender's mortgage insurance, meaning first home buyers all of a sudden had about an extra $70,000 to $80,000 worth of incentives and grants to go out there and buy property. But maybe they bit off more they can chew and now house prices are rising a bit too quickly for their liking. So we may see some intervention coming into the housing market this year. If you think this won't happen or it's never happened before, it actually has. In 2014, the banks put a cap on new loans to investors at just 10% to cool the housing market. And then also in 2017, they put a cap on interest-only home loans to stop the surging growth in interest-only loans by negatively geared property investors that were just outpricing and outbidding first home buyers. So sit back, relax, and let's jump into this article. Okay, so it says here financial regulators are closely monitoring the recent jump in house prices and are ready to clamp down on property lending if banks take on too much risk. And what's happening this month in March potentially is the responsible lending laws are going to be axed, or they were proposed to be axed this month by Treasurer Josh Frydenberg, and that's going to put the responsibility on the borrower instead of the lender. So that may mean banks are going to take on more risk, and it may put the financial stability or the financial system at more risk if they give out too much of these risky loans. The value of housing loans to home buyers had picked up a bit lately and credit was growing at a moderate pace, the Council of Financial Regulators said in its quarterly meeting statement published on Wednesday. So what I'll do is I'll pull up a chart here of the value of new home loans for this year. And what you will see here is in May, the new home lending absolutely collapsed. But what we're seeing is now it's skyrocketing the value of new home loans, and it's gone from around 1.2 trillion all the way up to 2.2 trillion. So housing lending growth is booming, and what we can use this data to predict is what will happen to house prices, because people need loans to go out there and buy houses. So if the value of new home loans is growing rapidly, we can expect to see house prices growing rapidly unless they clamp down on this new lending growth. So something the regulators are also monitoring is investors. Investors are returning to the housing market as property prices grew at their fastest rate in 17 years, especially in Sydney and Melbourne, and stock is at ultra low levels. House prices rose on average in Australia 2.1% in February. That's crazy. If this rate of growth continues for the rest of the year, that would be 20% house price growth in 1 year. But hey, I do expect for it to slow down once the housing market prices in these low interest rates, and as the first home buyers go out there and buy, and then we run out of first home buyers. And also a lot of people building homes, adding supply to the market, and we don't have the immigration right now to fill this supply. And a separate statistic from Australian Bureau of Statistics showed that lending to investors grew at its fastest rate in 4 years, and new loans to investors grew at 9.4%. So investors are now starting to see the gains, they're starting to see the potential returns, and where there are returns, investors will start to jump in. And we hope we don't see like what we saw from 2014 to 2016, where just investors went into the market and outbid all these first home buyers. So it says here financial regulators are monitoring lending growth, not house price growth, to consider if they need to put a brakes on real estate loans. At a meeting last Friday, the Council of Financial Regulators discussed credit growth. The commitment for new owner-occupier loans have increased strongly in recent months, consistent with most other indicators of housing market activity, the CFR said. They said there has been some increase in availability of mortgage lending recently, but they are saying that lending standards are being maintained. It'll be interesting to see that continues after March. They said the council places a high emphasis on lending standards remaining sound, particularly in an environment of rising house prices and low interest rates. And just when you thought interest rates couldn't get any lower, Westpac has lowered their 2-year fixed rate home loan mortgages to 1.79%. That's right, 1.79%. It's almost, when you factor in inflation, it's like they're almost giving away money at this stage. So with this considered, when interest rates drop by 1%, house prices can normally grow 10x at 10%. And we've had the average interest rate go from around 3.5–4% in 2017 when house prices in Melbourne and Sydney were at their peak, and now they're dropping below 2%. So this could mean from the trough to peak, we could see house price growth anywhere over the next 2 years of 20 to 30%. That is, unless these regulators step in to cool this housing market. They said, we'll continue to closely monitor developments and consider possible responses should lending standards deteriorate and financial risks increase. So who is the CFR and who runs them? The CFR is chaired by Reserve Bank of Australia Governor Philip Lowe and attended by heads of Australia Prudent Regulatory Authority, Australian Securities and Investment Commission and Treasury, and the Australian Competition and Consumer Commission, the Australian Competition and Consumer Commission. The Australian Taxation Office also attends the meetings. There are a lot of big important people monitoring this situation that's happening right now. So when the RBA and APRA were alarmed about risky home lending standards in 2014, the regulator tightened the home loan rules for banks for about 3 years. Like I was saying earlier, APRA introduced several so-called macroprudential measures such as caps on investors and interest-only lending to help the RBA cool surging residential property markets in Sydney and Melbourne. More recently, housing credit growth is picking up but is still only a modest 3.5% higher than in 2020. But at this rate of growth, it will go much higher unless they step in to cool this market. So they said if housing lending growth jumps in double figures before the RBA lifts interest rates, and they're saying that's not going to be till 2023 or 2024, but who knows, the bond markets are pricing in high interest rates, so it could happen sooner. They said APRA is going to have to step in to cool this housing market and new loan growth. The RBA's board's monthly statement on Tuesday said the owner-occupiers growth is growing strongly, but investor and business growth still remains weak. Dr. Lowe said lending standards remain sound and it's important that they remain so in an environment of rising house prices and low interest rates, Dr. Lowe said on Tuesday. So guys, even though that the housing market is booming and interest rates are at ultra low levels right now, you still have to be careful, because you could say, okay, house prices are growing at 2% every month. They're going to go up 25% in a year. I'm going to go out there and leverage myself to the max because interest rates are low. But you never know, all of a sudden the APRA could step into the market and put the brakes on there, and people could get caught in a sticky situation. And also, if inflation does get higher than expectations, then they could lift interest rates much sooner than they expected. And if people leverage themselves to the max, then they could be exposed just by an increase of 0.5% in interest rates. But the housing market definitely is looking very strong right now. So is it the time to buy? Maybe. It depends on your personal situation. Or the FOMO is getting real. I'll pop up an image here of an auction in Sydney for a 2-bedder apartment. You know, you can see people all over the streets. It's absolutely nuts. It's becoming a speculative sport, these auctions in Sydney and Melbourne. I guess because people can't go to the footy, so they're going to these auctions. It's just absolutely madness. Also, something else that's alarming that home buyers are now doing, and I'll pop up the link to the article here, is they're avoiding inspections and they're just buying sight unseen. And this is something very, very risky. And if you are going to do this, you would want a reputable builder and pest inspector to do a building and pest inspection. But even this is not safe. You don't know what the neighbors are going to be like, what the street's like, what the neighborhood's like, what the feel of it is. So you really have to go out there and inspect it physically, and not just FOMO there and think you're never going to get a house again if you don't, put a 10% above asking price offer down. So everyone, what do you think about this? Do you think APRA will step in to cool this housing market? Or do you think in Australia, we love booming housing prices, we love the housing market? Do you think they're going to let property prices run hot for another year or two to hopefully have the so-called wealth effect, where when people's property prices go up, they feel wealthier and they're a lot more likely to go out there and spend in the economy, and that's what's going to lift us up out of this recession? And for all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you all up to date on the latest that's happening here in the Australian property market. Let me know, do you like this setup here better, where I just sit down and go over articles on the laptop, or do you prefer when I do the webcam and screen recording? Let me know down below. And of course, here are some of my other videos linked here. I'll see you all there. Bye for now.